Let's talk about the wealth tax. Hey everyone, I'm Clayton Morris. So glad to have you here. So Elizabeth Warren, Senator Elizabeth Warren, has been beating the drum on the idea of a millionaire tax, as she's calling the ultra wealthy tax. And if you've been watching my show for any length of time, you know that I support this tax. Bernie Sanders is now on board with this ultra millionaire tax. And now the drumbeat is getting louder in Washington. The chorus of supporters is growing. And it's also interesting to see some mainstream media publications that are jumping on board. In fact, financial news publications are saying, you know, this shakes out. And this is perhaps one of the best ways to try to solve this income inequality or this wealth gap in the United States. And it would really only affect a small amount of Americans. So go ahead and smash that like button if I bring you any value here on the channel, and subscribe to the channel if you are new here. We do our show every day live at 9 a.m. Eastern Time, and then we also do our 9 p.m. Eastern Time show as well. Okay, let's dive into it, because I have some thoughts here, and it's also funny to watch billionaires whine and complain about how much they're going to price their valuable piece of art at. We'll get to all of that. We're going to hear from Bill Gates, who is whining a bit about it, and so much more. All right, so what is the wealth tax? Well, take a look at your screen here. This is exactly what Elizabeth Warren is rolling out. She's calling it the Ultra Millionaire Tax Act, and it would charge 2% annual taxes on household net worth and trusts between $50 million and $1 billion. An additional 1% annual surtax on household net worth and trusts over $1 billion. So again, this is going to affect maybe 1 in 1,000 Americans, literally maybe 70,000 families in the United States, 70,000. Now, these are people who heretofore we've not been able to tax the right way because money is hidden offshore. It's run through Ireland, where they're basically paying as a corporation $0 in taxes. You're putting things in the Grand Caymans. I used to have a college roommate, for crying out loud, who worked in the Grand Caymans. And that's exactly what he did. He helped wealthy people offshore their money. Now, not me. That had nothing to do with me. But that's what he did. And billionaires take advantage of that. They take advantage of every possible loophole they can find. So the chorus is growing louder now from financial publications and wealthy members of the establishment, Washington, D.C. But here's Barron's, which published this last night. Why Warren's wealth tax could be good for investors. Really? The richest 100,000 American families hold about $16 trillion in net assets. Senator Elizabeth Warren and some other fellow Democrats want to tax a fraction of that each year. Despite being another tax, several features of the proposal may improve American economic dynamism. Her colleagues said that these ultra-rich households pay the government a 2% yearly carrying fee on any wealth above $50 million, with a 1% surcharge applied to any wealth above $1 billion. The first $50 million of each household's net worth, about $5 trillion of the $16 trillion total, would be exempt from the fee. And the vast majority of American household wealth could also be exempt. Wow. Compliance would be enforced by auditing each ultra-rich family about once every 3 years. And numbers expect that it could, in fact, bring in over $3 trillion. If you're wondering how we would pay for this massive infrastructure plan, which is upwards of $4 trillion as it's starting to shape up, fixing roads, bridges, economic inequality in the United States, and it could help pay for recurring universal basic income for Americans. Imagine that. A tax on the wealthy, a tax on the ultra-rich could end up completely altering the landscape of our infrastructure in the United States. So how do billionaires feel about this? We're going to get to Elizabeth Warren's setup. So how do billionaires feel about that? Well, let's listen to Bill Gates yuck it up about how this would affect him. Now, he is in favor of taxing the rich. He just doesn't think Elizabeth Warren's ultra wealth tax, taxing the wealthy in this way, makes the most sense.
I've paid over $10 billion in taxes. I paid more than anyone in taxes. But I'm glad to have paid, if I'd had to pay $20 billion, it's fine. But when you say I should pay $100 billion, okay, then I'm starting to do a little math about what I have left over. Sorry, I'm just kidding.
That's funny. Oh, so when you pay 100 billion, you've still got another 100 billion. That is funny. That's a billionaire joke. So I don't know if I pay another 100 billion. He's not going to be taxed $100 billion. Again, go back to the numbers. 2%. Okay. So let's go back to the screen here. 2% annual tax on household net worth and trust between $50 million and $1 billion. Literally 2 cents. 2 cents. That's how much they would be taxed. It's not $100 billion. But to watch billionaires just come unglued about the idea that, oh my gosh, all of these billions that I've raked in during this pandemic might be taxed at 2 cents on the dollar. And how are you going to account for my worth, my net worth? Well, if you pay attention to the Barron's article, this is exactly how it would work. We'd be able to analyze them every 3 years to see how much they've got. What do you have by way of artwork? How many yachts did you pick up in the last year? Did you buy another golf course? Did you buy another sports team? It's pretty easy to track that stuff, especially when you are on a short list. Now, yes, people are going to try to skirt this. They're going to try to go around it, of course. It's always going to happen. But the reason that this works is because, unlike an income tax, a wealth tax reaches the root of the problem. It reaches both the wealth and the income inequality in this country. And the fact that the rich can hide assets offshore in ways that we don't have access to, where you can't. When you're just being taxed at an income level and you go to work every day, you're trying to put food on the table and you go work a 9-to-5 job, you're commuting an hour and a half to get to work and an hour and a half back, and you're just taxed on your income. They are not taxed on their income. They are taxed through capital gains, but they are also making sure they're in fantastic, favorable tax structures. So that when they have a massive amount of profit, they pay $0 in taxes because the way the tax code favors the wealthy. So listen to Tillman Fertitta, I never know how to say his last name, who I have a lot of respect for as a businessman, absolutely. But here he is saying that this is laughable, it makes no sense, and listen to two rich people yuck it up about the way that this will not work.
I would find assessing wealth a very, very difficult thing to do. Apart from the fact that if you take away 2% of someone's wealth every year, it's not all that long before you have no wealth left.
I know you're hosting this show on CNBC, but I just don't even think you understand how this works. You're going to take away 2% of someone's net worth every year. That's not how this works. But okay. By the way, also, you mean to tell me that those people aren't going to be making additional money? And by the way, so you, again, this is ridiculous. So if it's at 50 million and somehow they taxed you at 2% and it went down and now you're below the 50 million threshold, you're still super wealthy. And they're now not even touching your wealth because you met the $50 million threshold. So now you're below it. And guess what? In Elizabeth Warren's land, now you're off limits. So again, I don't think you fundamentally understand how this works.
You know, Tyler, it's ludicrous, okay? That's why they call it an income tax, so we can tax everybody on their income, which is the right way to do it. First off, I could have your top 4 accounting firms come in and do an audit on my balance sheet, and they would all come up with a different number, because what is the value? You can never establish the exact value of an asset until you sell it. And so it makes no sense. And then people own assets.
But that, again, is incorrect, because how are you on your taxes every year able to claim depreciation based on that asset? So you're taking advantage of these assets already on your taxes. You're already taking advantage of the tax code and structure this way. So the fact that we couldn't come in and figure out how much your house is worth or how much your sports team is worth, that's why we have actuaries. That's why we have accountants. That's why we have smart CPAs that are able to do this type of work. And by the way, this would be a small group of Americans. How many of you own a sports team?
And ranches and office buildings. Even take a sports team. Let's just take a sports team.
Okay.
That all of a sudden, this is all the family owns, and it's worth $3 billion. And so they're going to tax it at $90 million a year. But let's say the sports team only makes $30 or $40 million a year. So how does that work? And so it could be any asset in any class, but it's real estate. It doesn't make any sense whatsoever. I can't even believe that they're even going there.
Yeah, I would think, it would be very hard, for example, to appraise a piece of art. If you had a piece of art, what's it worth? It may be worth $10 million today and $6 million tomorrow and $40 million 2 years from now. It's very...
Hey, tune in to Power Lunch. Tune in to the Rich Person's Hour, where we can literally cry over whether or not my $10 million piece of art is worth more or less. Tune in to Billionaires Art Hour. Is my Van Gogh really worth $40 million or $39 million? Let's quibble over that. So they're getting into the weeds about this implementation process, right? This is going to be such a disaster. But let me just remind you about the structure in the United States just a few short years ago. Because in the 1980s, President Ronald Reagan completely altered our landscape, dramatically slashed the taxes on the wealthy twice, cutting the top rate on wages from 70% down to 28%. 70% down to 28%. And studies have shown that drop in tax rates, combined with the other trickle-down economics that didn't work in the United States, such as deregulation. Hell, look at what happened in Texas with deregulation of the power industry. How did that work out a few weeks ago? Well, because of that, we had steadily rising income of the wealthy and wealth inequality. That's what happened. Thank you, Ronald Reagan. So there's such a short memory here that's like people do not have historical context. So you have Republicans in Congress whining about this idea of this wealth tax, that this is ridiculous, that, oh my God, John F. Kennedy would be rolling over in his grave. He wouldn't even be able to be a Democrat today because of the amount of taxes that Democrats would want to raise on people. Oh, yeah? So here is Kevin McCarthy whining on a radio interview about how Jack Kennedy wouldn't even be a Democrat today. And listen to the radio host just falling in line with it. Yeah, Kevin McCarthy, who is the leader of Republicans in the House of Representatives. Trump baby. He loves President Trump. Flew down there to kiss his butt so they get some more money for after the Capitol Hill riots. Here's Kevin McCarthy on this radio show. And he says, you know what? Jack Kennedy would never be a Democrat today. Listen.
I'm going to do it. John F. Kennedy could not be a Democrat today. No. Tip O'Neill could not be a Democrat today. And the only thing I would give Presley and AOC credit for, they don't call themselves Democrats. They call themselves Socialist Democrats, because that's who they are. And in America today, the chair of the Budget Committee in the Senate is Bernie Sanders. I'm going to do it. John F. Kennedy could not be a Democrat today. No. Tip O'Neill could not be a Democrat today. And the only thing I would...
Look at that huge Ronald Reagan painting above his desk. Yeah. Jack Kennedy wouldn't be a Democrat today. Oh, really? Oh, okay. Let's remind you, the top marginal income tax rate was 70% with Jack Kennedy. After Kennedy's tax reform, after the tax reform, corporate tax rate was 48%. You know what it is today? It's 23% right now. And the top estate tax rate, 77%. But look at that. The top marginal income tax rate, 70% for the top earners in the United States. You know where it is now? Yeah. Nowhere near that level. Cutting those top rate wages from 70% down to 28% under Reagan. Now it's about 37%. and corporations down to 23%. So this idea that Jack Kennedy couldn't be a Democrat today, oh yeah? Under him, taxes were nearly triple what they are today. But okay, continue with that argument. And let's take a look at this. This from Gabriel Zuckman. The wealth tax, why a wealth tax, he asks? Or why the wealth tax, you ask? Take a look at this. The tax rate from 1950, it starts at the top here. 1950, 70%. Look at drops for higher income earners. And look at middle income. That goes up, and up. So yes, the high income earners are actually paying less than middle income and low income workers. Do you see that on the chart there? Again, I point out that if you work for somebody else at a lower income level, you are paying a higher proportion of tax at the federal and state and local level than a wealthy person. Again, why does Warren Buffett talk about his secretary as paying more in taxes than he does? Again, you're looking at it right here. That's a remarkable graph. I mean, look at 1950 all the way down for wealthy Americans. And then look at the 80s. Plummets under Reagan. Boom, 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 all the way down. And although American wealth and ingenuity and productivity has surged over the last 40 years, most Americans have not fared well compared to the richest in the United States. In 2020 alone, America's billionaires saw their wealth increase by $560 billion, even as tens of millions of unemployed Americans were dependent on food donations just to get enough to eat. Let me say that again. And in 2020 alone, America's billionaires saw their wealth increase by $560 billion, even as tens of millions of Americans are out of work, are food insecure, worried about losing their homes. So Elizabeth Warren wants to talk about all of this discussion about implementation. How are we going to figure out the price of art? How are we going to figure out how many yachts? What is your yacht worth? What is your yacht worth?
Because the implementation part is really a lot easier than it looks. Remember the way that the wealth tax is built. It says if your fortune is below $50 million, nothing. We're not talking to you. If it's above 50 million, your 50 millionth and first dollar, you got to pitch in 2 cents, 2 cents for every dollar above that. You hit $1 billion in assets, you got to pitch in a few pennies more. The nice thing about the way it's set up is we learned from some of the mistakes they made in Europe. So this version of the wealth tax says it covers all of your property. Doesn't matter whether it's held in stock or in real estate or in racehorses. Everything is covered, so there's no point in moving property around. Also, wherever you hold it, it is covered, whether you hold it here in the U.S., whether you hold it in the Cayman Islands. And remember, we are already valuing property. We do it at death. We value all real estate every year for real estate taxes. And valuing stock is not very hard. So I think we've kind of got the implementation part of this locked down.
Yeah. So Tillman Fertitta, who says this is ludicrous. How are we going to figure out the value of a sports team? So, and I love how he says too, by the way, that what if you have a family that their only thing they own is a $3 billion sports team? Poor. My heart goes out to you. What if the only thing you own is a $3 billion sports team? How many of you watching right now own a sports team? How many of you watching right now own a racehorse? Let me know in the comments below. What do you think about this? Should we pass a wealth tax? Drop me a comment below. For the next hour, I'm going to be hanging out in the comments, and I'll be checking in to see what you have to say about this. So again, should we pass this wealth tax? Let me know your thoughts. Go ahead and smash that like button, please, and subscribe to the channel if you're not already a subscriber. We'll see you back here first thing tomorrow morning at 9 a.m. Eastern Time. Until then, everyone, be kind to each other. I'll see you in the comments below.